Hello and welcome back to our channel. Let's get rich. Today we are going to discuss IPO analysis of AMI Organics Limited. First, we will talk about basic information of this company. Second, we will talk about the business and growth aspects. Third, we will look at the financials and do peer valuation. And then we will discuss the basic details of IPO. Finally, we will reveal our personal view on this IPO. So, without wasting our time, let's get started. First, we will discuss the basic information of the company. The company was incorporated in 2004 by Naresh Patil and it is based out of Surat in Gujarat. It is one of the leading research and development driven manufacturers of specialty chemicals. It engages in research and development, manufacture and the sale of specialty chemicals in Indian and global markets. As per the F&S report, it is one of the major manufacturers of pharma intermediates for certain key APIs. If you look more into business details, AMI Organics is having 3 certified manufacturing facilities, out of which one is FDA approved and the other 2 are ISO certified. It is having 8 patents as of now and has manufactured more than 450 plus pharma intermediates, serving them to 150 plus companies across Indian and global markets with just 500 working professionals under it. These numbers look absolutely great for a company with 17 years of experience in this industry. Talking about the business verticals and the growth aspects, AMI Organics is functional in 3 verticals: pharma intermediates, agrochemicals, and custom manufacturing. If you look at the revenue distribution, pharma intermediates accounts for around 88% of the operating revenue, whereas agrochemicals accounts for 5% of that revenue, and custom manufacturing accounts for around 7% of their operating revenue. If you look at the growth aspects in these 3 verticals, pharma intermediates, which has grown at a CAGR of 9.5% and it is projected to grow at a CAGR of 9.9%. Similarly, agrochemicals, which has grown at a CAGR of 11.9% and it is projected to grow at a CAGR of 12.2%. And then custom manufacturing, it has grown at a CAGR of 10% and it is projected to grow at a CAGR of 16.1%. So with these growth projections, these verticals looks very promising for the company's growth in the near future. I think we have reached more important part of this section, financials, which are very important to understand how the company is performing in terms of numbers. If you look at the revenue side, we can clearly say that numbers have been continuously increasing and it has generated profits of around 23 crores in FY19 and 27 crores in FY20 and 54 crores in FY21. And looking at the balance sheet aspects, the total assets have been increasing from FY19 to FY20. And here if we observe, both the total debt and total equity has increased, which is not a great sign for the company. This actually resulted in increase of the debt to equity ratio. If we talk about the peer group valuation in terms of PE ratio, we have 5 main competitors to focus: Aarti Industries, Hygal, Valiant Organics Limited, Atul and Newland. If you look at those PE ratios, all are lying between 30 to 40 rupees. AMI Organics is coming for this IPO with a PE ratio of around 41. So we can say that the company is fairly and fully valued with this IPO. Since it is not going to be underpriced, and we can say that there will not be major scope for heavy premium listing. So let's look at the final part of this section, IPO highlights. AMI Organics, it is offered at a price range of 603 to 610 rupees per share and the issue size is of 569 crores, which consists of fresh issue of 200 crores and the offer for sale of 369 crores. The shares are being issued at a face value of 10 rupees per share. This IPO is open from September 1st to September 3rd. One can check the basis of allotment on September 8th. If you are not allotted any lots, the refunds will be initiated on September 9th. Post that, the shares will be credited to your Demat account on September 13th and the listing will be done on September 14th. Talking about the lot size and allotment, a single retail investor can apply for a minimum of 1 lot of 24 shares and a maximum of 13 lots of 321 shares. If we see the chart on the right side, around 50% of the issue is assigned for QIBs and 15% for NIIs and 35% for retail investors. If you look at the objective of the issue, the company is coming for this IPO to raise funds for the repayment and prepayment of certain financial facilities and to fund the working capital and for the general corporate purposes. If you look at the day-wise GMP pattern, It is trading at a premium of 50 rupees on an average, and if you look at the GMP today, it has reached a high of 125 rupees just before the IPO day. So getting to the ultimate part of this section, whether to apply for this IPO or not. Considering all the factors discussed before, investors can invest for medium to long term perspective for better returns. And if you are looking for listing gains, definitely I would say that you must go for it. Like the other specialty chemicals, it is going to be oversubscribed and listed at a premium of more than 10%. With this note, I am signing off. Do comment yes or no if you are going to apply for this IPO or not. And please note that this is an educational video and do your own research before investing. To get all information regarding upcoming IPOs, subscribe to our channel Let's Get Rich. Like and share our videos.